Welcome to another edition of Frontier Opening Bell. I'm Temple Ashaju. With us on the program this morning, Joshua Debisi, the banking analyst from Vertical Capital Management. Thank you for coming through. Alikan Sachu, CEO and founder of Rich Frontiers Management in Nairobi, Kenya. I appreciate your presence on the show. And of course, our executive host on the show, Bosun Omofaye, the Chief Executive Officer of Frontier Africa Report, and of course, our executive editor. I appreciate your presence. Thank you, gentlemen, for coming in on the program this morning. Let's kick in with the markets and look at the indices. Nigeria was down week to date, some 0.69%. You got the BRVM Stock Exchange jumping 1.49% on Friday. Egypt, where we have the Cairo Stock Exchange, was down 1.35%, and Nairobi Stock Exchange made a move of 3% on a week-to-date basis, while the Johannesburg Stock Exchange was lower by 1.24%. Hope we'll be able to get a backstory for all of those numbers in the course of the show. East African headlines now. Kenya Central Bank accepts some 23.3 billion shillings in weekly T-bills auction, which was carried out on Thursday last week, the 18th of March. Kenya, UK launched business regulatory toolkit for SMEs as well. You got Kakuzi's profits after tax slipping by 13% to 622 million Kenyan shillings. And in Madagascar, IFC and Orange Money partner to advance digital finance, while the Africa Development Bank signed some $229.5 million deal for a road project in Uganda. And in Mozambique, the central bank net keeps rates at 13.25% on upside inflation projection. And these are the headlines we have from the Eastern African space at this point, where we'll get Ali Kanzachi to help us do justice to them.
Yes, thank you, Temple. Let me start with the T-bill auction. We've had pretty good subscription rates. The T-bill auctions have been oversubscribed for the last 2 to 3 weeks, I would say. So, that's a positive signal. But it does also inform us that banks are keener to hold their money in the short end of the yield curve at the moment. And I think that's because of inflationary pressures which are building. We had this big hike in the price of fuel, as you know about, amongst other inflationary pressure points. And I think banks are just being a little bit more cautious about going out further along the curve until they see some stability in that inflation rate. Before we came just now, I saw a tweet from the British High Commissioner saying that the UK-Kenya trade agreement is now fully operational. So, this is this development from a few weeks ago that we spoke about. Parliament had been pushing back, but I think that was more noise, and the signal obviously has been received now from the UK High Commissioner. This is a big step for Kenya. There were concerns that we could become a dumping ground for UK goods because there was an intention for UK goods to be zero tariffed, but that's a process over time. It's not happening in one hit. And I think in that context of UK and Kenya relations, we're seeing this launch of the business regulatory toolkit for SMEs. The SME sector here in Kenya is a powerful engine for the economy, and I think multilateral sovereigns are all seeking to stimulate activity within that sector. The big challenge at the moment for them is this turnover tax, which has been introduced and basically makes high volume, low margin business extremely unattractive. Kakuzi, there's an interesting backstory to Kakuzi. Of course, there was this court case in the United Kingdom filed by Amal Clooney. She was the lawyer representing workers and neighboring villages around the Kakuzi plantation. That has been settled, but got a lot of press. Kakuzi is an interesting plantation company and probably the most attractive one at the Nairobi Securities Exchange. Historically, it was predominantly a tea company, but they've made a huge play into avocados, macadamia nuts, and various other agricultural products. If you look at it on a 5 or 10-year cycle, dividends have been increased practically every year. This is the first year breaking a sequence when the profit after tax actually was lower, in part because tea was oversupplied in Kenya, prices went lower, avocado prices, which hit an all-time high in 2019, all these millennials buying cryptocurrencies and quaffing avocados on toast, as you know. But we saw a lower price for full year 2020 for avocados, and that impacted their performance. Sales were up 23%. This is a very interesting company, price earnings ratio of about 10.2, 10.4, net asset value considerably higher than the share price because of the land value. Worth having a look at if you like to go for alternative assets on the continent. Madagascar, IFC Orange Money partnering to advance digital financial services. This is really a common theme across the continent. So keep an eye on that. We'll see more of this. Of course, Orange is a big player in Francophone Africa, of which Madagascar is one. So you tend to see Orange playing in the Francophone areas, the likes of Vodafone and others in the more Anglophone parts of the continent, and of course MTN, a very big player indeed. AFDB putting some money to work on road projects in Uganda. Uganda has actually undertaken very large road projects over the last 5 years, and I think the AFDB is just backing that strategy. You know, we tend to look at more complex infrastructure, but sometimes just the very simple things like roads make a huge difference and have a huge multiplier effect, I've found myself. Mozambique Central Bank keeping rate at 13.25%. They've got a food inflation problem over there. Inflation is perking up. This is a global phenomenon we're seeing. Food prices spiking, but in Mozambique it's been more extreme than anywhere else, probably in part because of insecurity in northern Mozambique, which means the harvests have not been as good as they would have been previously. But they're basically taking a more cautious monetary policy stance, unlike President Erdogan in Turkey, who did some wilding over the weekend and fired his central bank governor, and you've seen some really wild moves over there in Istanbul.
Thank you very much, Ali, for those analyses. Bosun, any comments or contributions to these headlines?
Not much really, except on the AFDB road project support for Uganda. And I think this is perhaps some of the things we need to look at the Nigerian space. Why are we building XY roads to wherever? Is it economically viable? I'm sure if you get AFDB to support your road projects, I'm sure it's not just going to be a road that are politically motivated in terms of let us settle some political friends or regions or local government or whatever. So I think this is something very interesting. Then you look at the cost again, if we need to break it down, the cost per kilometer at which AFDB would say we're putting XY amounts of money on the table, about $250 million to say, look, we want to support you to build this road projects. What's the viability? I'm sure this route for Uganda will improve the trade, land border trade between Uganda, Tanzania, Rwanda, Kenya as well, and a few other countries. So I think it's a good thing for them. It's a good one for them that you have AFDB. Watch out on this project. You find out how quickly this project will be completed and at what cost, and you find how economically positive results that you have for Uganda.
Thank you, Bosun. Thanks for those contributions on these headlines. Let's move on now to the Western African headlines. The AFDB again floats and prices some $2.5 billion global benchmark fund at 0.875% due March 2026. The Central Bank of Nigeria begins the two-day MPC rate-setting meeting today, and Nigeria's got the Fitch ratings, keeping the B rating that it had assigned to the country. Outlook is stable, sees inflation. Fitch sees inflation at 16% in 2021. Union Bank of Nigeria, you got them paying the 25 kobo dividend. UMOA, that's the West African Monetary Union. We've got Togo raising some 22 billion SAFA in stimulus bonds from the West African Monetary Union, which is UMOA. UMOA stands for the Francophone translation of that appellation. In Ghana, they've set the initial price guidance for the 3-year bond that's between 17.3% and 17.7%. Let me get your thoughts on these headlines, especially the MPC rate meeting. Joshua, what are your perspectives at Vetiver Capital Management? What do you expect them to do? Are you expecting the CBN MPC to hold rates or to adjust?
Thank you, Temple. So the truth is that we expect that they will keep rates pretty much stable due to the fact that there have been a lot of changes or adjustments made by the CBN, with regards to whether it's your foreign currency, there have been a lot of adjustments here and there. And so it would be premature, we believe, for the MPC to come out and make any changes to the monetary policy rate or the CRR rate or, the asymmetric corridor at this time. So we do expect that maybe as things start to unfold further on in the year, we might see some adjustments. But for now, it will be far too premature for them to come out and give any kind of adjustment. With regards to the Fitch rating, I'd say I'm a little bit surprised to some extent that, they're not as bearish as most other ratings agencies and most other international agencies have been, by maintaining the stability and keeping us at B, and also expecting inflation to only be at 16%, because I think that's very atypical for most international organizations. I'd say that, even Vetiver ourselves are not that optimistic about inflation this year, obviously due to the various challenges that, we currently face, whether it's insecurity all across, the northern part of the country, down to, exchange rates, down to high cost of importation, down to fuel uncertainty, let's say. All these things are negatively impacting inflation, and we've already seen quite high inflation, in the first 3 months of the year. And the chances are, due to where we're coming from in 2020, we'll see this for majority of the year. So 16% seems a little bit mild, in my opinion. But at the same time, it's still good. It gives us, a bit of leeway internationally by keeping our rating at B. Although the truth is that the chances of Nigeria going into the international market to borrow, even from, like a Euro bond or things like that, at this very moment in time, is not very high. The government is going in a bit of a different direction. They want to sell off some assets. They're looking for ways to raise money. Since our cost of borrowing is already quite high, and our debt is, has more than doubled since the start of 2015. So the chances of all these things culminating in us borrowing at a stable rate is very low at this point. And I think that's just, and international investors again are going to price in the fact that inflation is meant to be at 16%. So the OMO market is really where they are, the only place they're likely to play. And even then, the rates are still too low to attract the level of investment and the level of foreign exchange that we need in order to actually, inject some impetus into the Nigerian economy, unfortunately.
Joshua, you're the banking analyst we've got right here. Talk us through the 25 kobo dividend that Union Bank is paying, and of course their earnings release.
Well, so Union Bank is not part of our coverage, but what I will say is I'm not surprised that they did give out a 25 kobo dividend. That is the same amount that they gave out the year before. My expectation for the entire banking industry was that most banks would at least maintain their dividend payouts from 2020. We've only seen one bank that took the bold step of reducing their dividend payouts, and that was UBA, and the market was not pleased with that outcome. We've seen GT already come out with their 2.70 kobo dividend payouts, which was far more encouraging for the market and which the investors took more kindly to. And I think by the time this earnings season is over, we will see a lot more banks follow the GT and Zenith examples and the UBA example, or even the UBN example of maintaining your dividend payouts, because most Nigerian investors are just looking at the dividend payout, the dividend yield. Although UBN's dividend yield, interestingly enough, is still under 5% with this 25 kobo payout, but at least they're giving their investors, something.
Reward.
Yeah, exactly. Some reward for keeping their shares. And again, the gross earnings were down by only 1.9%. I think overall, we've seen gross earnings go down across the board, but a lot of banks were able to maintain their profits or even increase their profits in the case of Zenith and GT by managing their operating expenses and not having such high provisions as we expected. Even though Q4 we did see a pretty significant jump in the level of provisions that was given out. I think this all has to do with the fact that the restructuring that happened in Q2 really only lasted for about 90 days or gave about a 90-day moratorium, or shifted the payout or the payment period by about 90 days in most cases. So,
All right.
As soon as that came back, we sort of had to go and give more provisions by the end of it.
Thank you very much, Joshua, for those contributions. Bosun, if you could help us with the next 60 seconds to explain the significance of the AFDB 2.5 billion global benchmark bond. We understand it's the largest $5 global benchmark issue that they've done in recent time.
Yeah, yes, of course. AFDB is at the global space. It has the muscle to do all the capital raisings that it needs. You can see the fast and furious way in which the DFI is intervening across various sectors, the continent, whether it's water, sanitation, road, COVID-19 pandemic, electricity, renewable energy, green bond, whatever it is. So I think it is a very good thing for them. I'm thinking about the banking story, because if you look at the Southern African story, the banks are also coming through with not some good numbers like Netbank and the rest of them. Look at Kenya, and that's why I want maybe Ali should speak to. When you look at the Nigerian banks and the NPL that are coming through from Kenyan Bank, from Cooperative Bank, from KCB, are a little bit worrying. Is this maybe if this is an industry thing for Kenyan banks and for Southern African markets? Ali?
I was looking through the breakdown of the NPL. So total non-performing loans, as per the latest report I've seen, is about $4 billion across the banking sector. And that's pretty chunky, frankly. And the question is, what kind, if you desegregate where these loans are, which ones look as if they're going to take much longer to work off? Interestingly, for now, investors seem to be looking through this noise, and they've been bidding up banking shares, and that's why you saw that 3% rally week on week, predominantly because of banking performance. So I think it's an interesting scenario we've got here, where I think investors were expecting worse. The current NPL ratio at $4 billion is not as bad as their worst case expectations, and that's lifting the stock market a little. However, I think, really the banks here in East Africa need a sharp recovery in order to deal with this scenario that they've got. And it's not 100% clear to me that sharp recovery is coming anytime soon. The concerns now, if you look at our infection rates, we're at record highs here in Kenya, probably Tanzania, Ethiopia as well. That tells me that, that rapid bounce back everyone was hoping for is not going to be that quick. Tourism, Kenya might well be put on the red list later this week by the United Kingdom. That's not going to be helpful either. So look, let's see how quickly the recovery comes and how the banks deal with the scenario that they have.
Thanks a great deal, Ali, for that. Moving on now to the Southern African markets, we've got warnings on cryptocurrency again, while the financial sector conduct authority issues a second warning as consumers lose more money in that country. Investec says 29% profit drop. And of course, Rand Merchant Bank reports a loss of the tax of 74% to 45 million rands. Then you've got Namibia's public debt rising to some 76%, and now Zambia to miss its $20.2 million debt coupon payments due on March 20th, which is already passed. We'll come back to you with these headlines, Ali.
Yes, let me start with the cryptocurrency. I mean, there is a school of thought that we're in a massive tulip mania level delusion. You know, The Madness of Crowds was that book that was written about this kind of thing. And the concern is that, you know, many of our people have put in their hard-earned savings, and for now, it's, you know, in most cases it's worked if you've got into Bitcoin. The challenge is where people are putting their money into mirror investments, which are not going directly into the real instrument. A lot of people have been playing in that space, and that's, you know, that contains a lot of risk. I think it's right for our financial authorities to be warning investors about this, because if you look at volumes traded, for example, in Nigeria, it is off the charts, right? So yes, you know, be careful, caveat emptor and all of that. You know, we can believe in this new global crypto millennial economy, but at the same time, you know what markets do, they overshoot, and currently it feels like we're overshooting to the upside, and therefore could overshoot to the downside as well.
Ali, do you think there's need for more investor education at this point?
I think, you know, so that's a very interesting question. I think there's a definite need for more investor education, and also a definite realization that the regulators' purview, they cannot control this. I mean, you know, this is now in the sort of gray zone of people's computers, and it's practically impossible to have oversight and deal with that situation in that manner. I think that's a challenge that the regulators occasionally have not recognized sufficiently. So yes, more investor education, definitely, because, you know, I hear people talk about returns which are so off the wall. You know, they're expected to double their money in a couple of weeks, quadruple it in 4 weeks. And they need to be aware that this is entirely, you know, never happens in the markets. And if it does, take a good look at what's going on, because, you know, you might get caught out. So absolutely. Just to quickly touch on two things: Namibia public debt rising 76.25%. It's blinking amber now. It's been in low growth quite a while. And Zambia, as we know, they're in a conversation with the IMF. They got a lift from the copper price, which rallied quite sharply this year and at the back end of last year. But they've still got a problem that they've got to deal with. And the question is, how are they going to go about dealing with it? President Lungu, of course, is facing an election, so he's probably not that keen to deal with it right now, because he wants some money in the coffers in order to win the next election. So really, timing tells you, the electoral cycle tells you, this gets dealt with after the election.
Right, and thanks a great deal for that, Ali. I'll post in one or two comments before we move to the North African space. We've got less than 3 minutes to go on the show.
Yes, I'm sure Joshua would want to comment on the crypto story. I'm sure the Nigerian Central Bank made a comment over the weekend or so, which I saw in the news over the weekend.
Okay, so over to you, Joshua.
Okay, so what the CBN said, or what they clarified, is that they are not stopping anyone from, you know, transacting in cryptocurrency, but what they're doing is they're keeping it outside of the banking system. So, sure, you are free to, you know, buy and sell cryptocurrency in theory, but they're not saying that you're allowed to use, you know, your bank account to carry out those transactions. So they will still have to be done, you know, through third parties and through peer-to-peer trading. So nothing really has changed, but I guess they're sort of softening the rhetoric more than anything. The policy remains, you know, in place, but the rhetoric has sort of changed, and they're saying you are free to go about, you know, performing your transactions, but keep it out of the banking system. You are not going to use your, you know, e-wallets or your bank accounts to buy and sell cryptocurrency. So
all right, then thank you for that. All right, thank you so much, Joshua, for that clarification. Let's finish off now with the Northern African headlines, where the Central Bank of Egypt has got banks trading capital rising. EGLeaves also plans to raise portfolio value to 2.3 billion Egyptian pounds by the end of this year, 2021. Morocco's got bank liquidity deficit widening by some 3% to 68.3 billion dirhams. And you have Tunisia's Atraf Tassim, now as the new AFDB country director for Morocco. We need your understanding or perspectives rather on these headlines for the Northern African space, Ali.
Just quickly, I think the Egyptian story speaks to a pretty robust, well-capitalized financial sector. Seeing a more expansive Egyptian banking sector, particularly in Kenya. We saw the entry of the Egyptian bank that took a stake in Mayfair, and I expect them to continue to play a regional role going forward. It'll be interesting to see how and where they pick and choose their next targets. Overall, look, I think, as I said before, Egypt is an outstanding story in the context of 2020, grew at 3.8% full year GDP. That's a great platform to rebound further into this year. Everyone is pumping in cash, which should surely boost the performance. I think it was very clever of Sisi to put out the minimum wage. That will shore up the political angle, which has been one of the problems for Sisi, because there's been a lot of repression, I'm afraid, in Egypt. So I think that's a positive and clever move. And again, the timing was right. We let the economy build strength and muscle, and then he's done that. So I still prefer Egypt and Morocco, the wings of North Africa. I think Tunisia, you've got this problem around tourism, and Libya, of course, post-Gaddafi has never settled down, and Algeria is running down reserves like there's no tomorrow.
I appreciate that, Ali. Thank you so much for all of your contributions on the show this morning. Hussein, your final thoughts?
I think the final words has to do with Zambia. I think it's one big story looking at the continent, and this default which happened over the weekend. We haven't had any news this morning as to whether they were able to meet this payment on Saturday, which was on Saturday the 20th, by the way. But of course, from all indications, the Edgar Lungu's administration actually defaulted on that. That's taken out all the way down to April, when the initial default of about $30 million happened late last year. So what happens between now and April will be very interesting to see how the authorities in Lusaka is responding to all of that.
We're going to keep our eyes fixed on that space actually as well here on Frontier Africa Reports. Thank you, gentlemen, for your analysis on the show this Monday morning. Michelle Debese from Vetiver Capital Management. You're the banking analyst. Appreciate your thoughts. Ali Kansaju, thank you so much for your perspectives as well. Joining us from Frontier, from Reach Frontiers in Nairobi, Kenya. Sonoma Executive Editor here at Frontier Africa Reports. Thank you so much for your analysis as well. Go have yourself a profitable trading week. Thank you for being a part of the show. I'm Temple Ashadi. See you next time. Bye for now.